Hello traders, hello everyone. In this video tutorial we'll talk about Pitchfork and how to use this trading tool with Fibonacci. Please read the risk disclaimer before we'll talk about these two trading tools. Thank you guys. So why should we use and use Pitchfork with Fibonacci? These two trading tools will help us to identify great entry points, targets, confluence areas, breakouts, false breakouts, and potential reversals. Let's take a few examples. And here we have the euro versus the US dollar. As you can see, we had an important uptrend here. And let's draw Fibonacci retracement on this major swing higher, and as you can see here, the price has increased here as much as 1.2349, where it has found strong resistance. It has developed here a bearish engulfing. This reversal pattern was confirmed. The pair has developed, has printed a corrective phase here, and it was almost to reach the 38.2, which represents an important target when using the Fibonacci retracement. Okay, and let's draw descending pitchfork here, 1, 2, and 3. So now we have also descending pitchfork here on the daily chart, and as you can see here, the price has decreased right after printing this bearish engulfing. It has decreased and it has reached the first target represented by the medium line of the descending pitchfork. As I've told you in a previous tutorial, you can use the medium line as a first potential target when you have a descending pitchfork. Okay, so the price has reached here the medium line, also the 23.6. It has developed a bullish engulfing here, which had signaled a potential rebound in the short term. The price has increased and it has registered only a false breakout here above this former high, signaling a new potential drop here in the short term. This breakdown here below 23.6, below the medium line, has signaled that the price could continue towards the 38.2, okay, where it has found strong support. Okay, and we'll leave this Fibonacci retracement here, and we'll draw another Fibonacci retracement here on this minor swing higher. Moment. Okay, and as you can see here, the price, let's select another color for this one. Okay, so as you can see here, the price has decreased and has found a first target support at 38.2. It has increased, has retested the 23.6. This breakdown here below 38.2 has sent the price towards 50% retracement level, also towards the medium line of the descending pitchfork. Okay, this bullish engulfing has signaled a potential rebound, and as you can see, the price has increased, has retested the 38.2 and has jumped to retest the 23.6. And here this pin bar has signaled that we may have a new sell-off. The price has decreased to 38.2 to 50%. it has dropped right below this major 23.6, below the medium line. Here it has retested the 50%, and then it has continued to drop below 61.8 towards 78.6 and towards the major 38.2. Okay, so as you can see here, you can use all these Fibonacci retracement levels as support and resistance areas, and also the medium line as a potential target. And let's draw here another descending pitchfork. 1, 2, 3, a minor descending pitchfork. Let's select another color. Okay, and as you can see here, we have here the upper medium line of the minor descending pitchfork. We have the medium line of the descending pitchfork, and we have here the lower medium line. Okay, so the price decreased after retesting the upper medium line of the minor descending pitchfork, has dropped right below the medium line. It has increased here to retest the medium line, the 23.6. It has decreased again, and here, very important, we have a confluence area. The price has reached the major medium line, the lower medium line of the minor descending pitchfork, and we have a confluence area here at the intersection between the lower medium line and the 50% retracement level. And this false breakdown through the confluence area has signaled a potential rebound. The price has increased, has jumped above the medium line, and here we have another confluence area at the intersection between the upper medium line of the minor descending pitchfork with the 23.6. Okay, and this pin bar here, this false breakout, has simulated a potential sell-off. As I've told you earlier, the price has decreased, has dropped it again below the medium line with the target at the lower medium line. Okay, here false breakdown, also false breakdown below the 61.8, rebounds, retests here of the medium line, and here we have another confluence area at the intersection between the medium line with the 50% retracement level. Okay, false breakout, rejection, new sell-off, and the price has dropped also below the lower medium line, trying to reach the major 38.2 retracement level, this major downside target. Okay, and as you can see, you can use these Fibonacci retracement levels as targets, as entry points. Also, you can use these as static resistance, static support levels. Okay, so these two trading tools could help you to identify great reversal points at confluence areas. So false breakouts to a confluence area will signal a move in the opposite direction, as you can see here. False breakout, decrease, false breakout, decrease, false breakout, drop. Okay, guys, that's it for today. Thank you for watching this video tutorial. I'll come back with other video tutorials soon. Don't forget that you can join our VIP Telegram group by accessing this link here, Learn to Trade Go Premium. You can subscribe to our YouTube channel. You can comment, you can share our videos, and you can visit our website, Learn to Trade, for more analysis, educational materials, and services. Okay, guys, See you soon. Bye bye.